Hi, good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. Today is 27th of March and today is the last day for the expiry for this particular financial year. And it was a good expiry, I would say, except for the fact that the market surprised a little bit on the upside with a very big move right early at the start, and that ensured that all the calls were taken out of the system very early. But after that, I think it was pretty much a smooth sailing. There has been no major surprises in the market today. After that, it's been relatively calm and peaceful. So it brings to an end a long journey for the full financial year, and I mean, the traders would understand what I'm talking about. It's a long journey. When you start off the financial year, you have a lot of hopes, aspirations, plans in mind, and this year we have seen so many changes happen in the market, right from number of expiries getting introduced to number of expiries getting taken out to days being changed to lot size being changed to margins being changed to I mean, any change that you name it, it has happened in the market. And yet if you have been successful for this particular year, then I would say it's a great achievement, because the markets have been very volatile. We saw one of the sharpest corrections in the market for many years, especially after COVID. This kind of particular fall has not been seen, though there was a correction in from September 21 as well, but till June 22. But this correction was much more bigger and much more brutal, I would say, because a lot of stocks corrected 50-60% and a lot of excesses were taken out in the market. So this year has been quite remarkable in terms of the number of changes that have happened. And if people have been able to do well in this particular kind of market, then it's very good. So I will take you through what exactly happened today and how the trades played out, and then I shall discuss something about what the views are for the market going ahead. So as I said, today was the start was absolutely it was kind of down start that happened today. Okay, and from there we just zoomed up. So you can see by 10:20 we had kind of done whatever move that we had to do by 10 o'clock only, and after that we've just been a very narrow band. So this is the time, when all the options spiked, especially on the call side. But after that there has been steady smooth decay, and there was a lot of premium today in both in call and put side. So the realization was good. So immediately over here, all the stop losses, the call stop losses got triggered. Thankfully, no put stop loss got triggered in this down move, and then the puts were more than enough to take care of the calls. So it ended up being a good day, at least for me, and I'm sure for all the other option sellers also, it would have been a very smooth ride, provided you were able to manage the calls. If anyone was trying to firefight with the calls and put both, it becomes very tough, because in such a scenario, your calls will just go 5x easily, without any trouble. So if your stop losses are there in the system, then you will be stopped out, and then you know that how to manage the trade. So for me, I got stopped out on the calls. I think in this particular by 9:20 odd, I think I was stopped out in my calls, most of the positions. In fact, I think all the positions, yes, all the positions the call had gone. And from there, it was very smooth sailing, because the puts were heavy and I added some more puts over here. And then I took some calls as well, which are far out on the money. So it ended up being a very good day. And thankfully, because of this, March is finally turning out to be, I think I'll be closing March flat, which is a big relief for me, because as I had said that February was really good, and Feb and March combined returns are also very good. So I was just hoping that March gets closed at flat also. That will be good. And even after a flat March closing, the year will end at a much higher number than what I had expected. It's going to be significantly good in terms of the percentages. I'll probably make a video on that separately in a couple of days time, but sufficient to say the ROI returns are in excess of 2% plus months per month. So for the FNO bit. Now coming to how the daily chart looks like for Nifty. This is the daily chart, and as you can see that we crossed this first resistance line, and then we crossed this slanting line, which was lower low lower high line. And then the first significant resistance that we were seeing, we have taken we have gone down from that. Okay, so which was 22,800, and as I have and 23,800, and as I have said, 24,200 is the one, that is the final one, because if we cross that, then we can say that this leg of particular down leg is over. So of course it was but natural that we are going to see some resistance over here, and we saw that, and we are down for a couple of days. Now let's see if we are able to resume our journey back. Then will we make an attempt for 24,200? I don't know, because typically what happens is that you have these sharp up moves, then you have some sort of cooling down for 3 4 5 days, and then either the market will go up or go down depending on what direction market takes, and that is going to determine whether we are going to go and break 24,200, or we are going to go down. Because if we go down, then we'll have to see which all levels will end up holding. But still significant to see that the first resistance that was there on this dotted line was the resistance came in over there, and we have kind of taking a breathing space over here. Now coming to how the open interest is, the open interest actually changed very quickly. We will be ending flat at 1, but open interest, the whole game today was the change in open interest. Yesterday, when the bearish positions were being made, the open interest had gone down to 0.8, but today morning, when we saw that gap down, I think most of the positions were closed at that point in time, because immediately after that, when the market started to go up, we saw how the open interest got covered, and it became positive. It had gone to almost 1.15 also at one point in time. So it was very clear that the up move should be sustainable. There is no reason for us to believe, and that is why there was more confidence in holding the puts and then adding to the puts as well, because the open interest was also favorable. And in terms of, if you look at how the straddle premium behaved, this is how it looks like. So it was kind of a fairly smooth decay once the decay started, and we opened at a good level. So we opened at about 130 odd level, 124 it is showing on a 15-minute chart. So it was around 139 if I'm not wrong. We opened somewhere over there, and then it was a good premium, because what happens is that Nifty premiums at this kind of a VIX, anything above, typically we tend to open at 100, 105, 108. Then there is hardly any chance to make money. Sometimes we opened at 85 also. During those days, it's like very, very difficult to make money. But at 130, 35 odd, there is a chance that even if one side goes, which happened today, like Nifty call options went, you still will end up making good money, because the other side will give you enough to compensate for the call loss. Now, so that was the case. So premium was kind of helpful, and that set the tone. Now coming to how the indices behave today. Now, if you look at, this is the indices chart, and we had media, energy, PSE, bank, financial services, small cap, all doing very well. FMCG and Nifty is will end at about 0.4 odd. But in sectors which have not done well is auto and pharma. Why auto? Because of course there's a news of the US levying 25% tariffs on all autos and auto components from all the countries, and I will show you which all countries are hit maximum because of that. So India is about 16% of the auto production in terms of components, etc., goes to the US, so that will be affected. Now coming to where we are in terms of the 52-week highs, from the 52-week highs. So Fin Nifty is almost now reached its 52-week high. It's just less than 1% down. Banking is just 5% down. Nifty 50 is trying to get in under the 10% mark. Mid cap is already gotten under 15% mark, and small cap is under 20% mark. So there has been a good recovery in the markets, as we have seen. Momentum is at 27, and alpha is at about 26. These all indices had crossed 30% plus mark. So you can see that how the rally is has shaped out, and because of that, the indices which have done well, like Fin Nifty and all, are almost making their 52-week highs. So this is the chart that I was talking about. This is a chart of all the companies, all the countries which have got a contribution to US. So if you look at, Canada is 93%, Mexico is 82% of their exports go to US. So they will be very, very badly hit. Japan 34%, and so on. So European car stocks were down today, as I believe. India is about 16%, so it's not less, but it's not very high. So this is what is, and this tariff thing is going to continue on April 2nd. There is going to be more news coming in, so we will see how the world markets react to that particular thing. In terms of the global cues, I think the global cues are all fine, except for Nasdaq, which was down yesterday, and I think that was one of the reasons for our soft opening as well. The futures are flat. In terms of the Bitcoin is about 87,000, which is okay. US dollar index has gone up to about 104 from 103, which is okay. Brent is at 72, which is fine. USD INR is at 85.5, which is absolutely fine. Silver is again gone above 34, so there is something brewing up in gold and silver. Both are near to their all-time highs, so we have to keep an eye on that. Though the news of physical gold delivery etc has gone down a bit in terms of the UK vaults, but still a concern remains as long as the prices remain elevated. So we have to be very careful on that account in terms of the gold and silver prices. And as I have been maintaining that there should be certain percentage allocation that one can consider in these two precious metals because they form an integral part of any portfolio hedging, because simply because of the fact the way gold and silver react in terms of the opposite movement compared to the equity markets. So one should have fixed income, one should have equity exposure, and one should definitely have gold and silver in their portfolios. It helps you to make a well-rounded portfolio. And that just reminds me, if anyone is interested in making their mutual fund portfolio, please fill up the form which is there in the description box, and I will get back to you in terms of how we can make a very good, solid, all-weather risk tolerant kind of a portfolio which will give you optimized returns and will with very good risk management. So if anyone is interested, please kindly fill up the form and I shall get back to you. Now coming to where we are, how we are placed, I think it is, as of now everything is okay, but there are a lot of uncertainties which are creeping up. One is the US tariffs, which I said is going to come on April 2nd. The other is US markets themselves, because they have been correcting a lot, so that is causing a lot of uncertainty in around the globe. And third, as I said, is gold and silver. Both of them are not stopping, so that's not a very good sign, because that shows that there is some stress in the markets which is brewing. Now whether that is true for international markets because they haven't corrected that much, and it might not affect us that much because they already corrected, or is it going to lead to a bigger problem, only time will tell. But that these are some of the things that one needs to watch out for. In terms of our markets, it is looking okay. We have been able to cover, finally we are closing a green month after 5 months of continuous negative. We are closing the second week also in green after almost 5 or 6 weeks preceding that were in red. So it is a very welcome rally. A lot of names have rallied, a lot of small indices have rallied, a lot of momentum indices have rallied. So that's always good, because one way correction is never good. Best is if you can have time correction, and we somehow manage in the next 6-8 months with some time correction. That will be the best case. But because valuations are still very high in my opinion, a lot of these segments like small cap, micro cap, etc., even after falling this much. So let's see how things go. But in the very near term, next week is a new expiry, new financial year. So a lot of things will and also again the date change that's going to happen in terms of the NSE expiry. So a lot of things again to grapple with. But that has been the hallmark of trading this year, that you have to be adaptive, you have to adapt to changes, and you still have to come out a winner. And markets reward people who are able to stay in the markets for long. Like you can take the example of March itself. March has been very rough, if you ask me, in terms of the movements that was there. But if somehow you were able to hang in there, now by the end of it, as I said, March will be closing flat, so it's fine. There'll be some months that you probably will make less money. There'll be some months where you'll make more money in trading. That's how option games goes on. But it is, if you are able to play this game for a long time, if your systems are strong enough, only then you will survive, and only then you will thrive. So having said that, adaptability is one of the most important things in trading, along with temperament and a very strong system. So that's it from me now. I hope you guys had a good year. I hope, please do write in your comments how the year went, how this expiry went, how you're seeing next year. And I shall see you soon with another update. If you like my content, please do subscribe to the channel. Please share it with your friends, and I shall see you soon. Bye bye. Take care.